Well, it's been yet another choppy session on Dalal Street, and major indices have ended on a mixed note. With 2 days to go for the budget, it looks like there are quite a few push and pull factors that are at play. The Sensex and the Nifty closed in the red, but with minor losses, the Bank Nifty was the top index gainer, led by ICICI Bank. That index closed with gains of nearly 1%. Mid-caps continued to see buying today as well, and the index ended with gains of a little over 50 basis points. Now, in the earnings space, all eyes are on ICICI Bank, that is set to report its third quarter numbers very soon. The stock ended the day higher on expectations of a good performance for the third quarter. And Abhishek Kothari joins us now with what to expect. Abhishek.
Well, analysts are expecting a strong quarter for ICICI Bank. So what are the key things to watch? The slippages are expected to decline quarter on quarter. So around 2,400 to 3,000 crore is what the analysts are working with. Last quarter, it was at 3,117 crore. Now, the total stress book is at 23,500 crore, forming 4.3% of the book. The management's outlook and commentary on the same will be very positive to see how they see this book going ahead. Loan growth momentum is expected to pick up, and loan growth is expected between 14 to 15%. Last quarter, it was at 12.8%. We have seen with other private banks that, they have been able to command better pricing on their products, and the improvement in yields have driven the net interest margin. And if the same factors goes in for ICICI Bank, their last quarter net interest margin was 3.35%. Any improvement over there will be positive. There can be gains or, from recovery of accounts under NCLT, which will be positive. So our poll suggests an growth of 18.3%, which is the highest in last 15 quarters, while the net profit could grow up by 8.5% to about 1,792 crores. And this will be the first time that the net profit will grow in last 7 quarters. Back to you.
Well, that may be an important number to watch out for. Thanks, Abhishek, for joining in with that. Now, here's another headline from ICICI Bank. The panel headed by former Supreme Court Judge B.N. Srikrishna has submitted its report in the probe in the Videocon loan case. And the bank's board is believed to have discussed the report at its meeting that is being held as we speak. Now, remember, the lender had set up this panel under Justice B.N. Srikrishna on 30th of May of 2018 to conduct an independent inquiry into the allegations that have been levelled against the bank's former MD and CEO, Chanda Kochar. Now, do remember, the charges against her were of quid pro quo in the 3,250 crore rupee scandal, that engulfed Chanda Kochar's career later, and she resigned as the MD and CEO back in October of 2018. Now, in the meantime, even while this internal probe was not completed, CBI externally has filed an FIR in the matter as of the 24th of June and January. And do remember, besides Chanda Kochar, Deepak Kochar and Venugopal Dhoot of Videocon, the bank also, has named several other officials who were previously associated with the bank, including Zareen Daruwala, KV Kamath, Rajiv Bajaj, etc. Rajiv Sabharwal, also in the probe. However, no charges have been levelled against them. Now, in more earnings, Bajaj Auto has disappointed the street with its third quarter performance, and the two-wheeler major has reported a second consecutive quarter of an operational miss. Now, its margin figure has witnessed a drop of 390 basis points, coming in at 15.6% versus the expectation of 16.3%. Sonia Shenoy has been doing all the number crunching and joins us now with the details. Sonia.
Well, it was the second consecutive quarter of an operational miss for Bajaj Auto, weakness in margins, on account of which the profits as well were below what the street was estimating. Now, revenue growth was fine. It was a 16% growth that Bajaj Auto saw, but the big pressure pocket really is the margins. This time around, margins have fallen 390 basis points year on year, coming in at just 15.6%. Realizations for the company too have been under pressure, down about 1.5%. But the strategy of pursuing market share over margins is something that has worked well for Bajaj Auto. Their market share in the domestic motorcycle market has gone up to 20% in Q3 versus 18% last quarter, and even in the entry-level segment, their market share has increased. This, of course, has come at the cost of margins. Margins have been under pressure for a couple of reasons. One, of course, the high discounts that the company has had to offer in order to liquidate their high inventory. Raw material cost as a percentage of sales has also gone up. And, the company has been facing heat in terms of demand too because of higher cost of ownership and insurance costs. All in all, the company's guided band of 16 to 17% margins has been breached on the downside. So the stock closed in the red today.
All right, Sonia, thank you very much for joining in with that. Now, Divan Housing Finance Limited, or DHFL, is taking Cobrapost to the court. This after Cobrapost alleged that company's promoters siphoned off 31,000 crore rupees through shell companies, and the company's stock has continued to fall in today's session as well, closing over 4% down. Now, this has compelled the housing finance company to clarify its position through a conference call which it held this morning. The DHFL management said that the allegations against the company are malicious and the company is taking legal measures to examine the complaints. It has also termed the complainant's motive as a conspiracy to destabilize the company, and it went on to add that the company is making no contribution to any political party or its subsidiary. Listen in to some of the key comments coming in from the con call this morning.
As a core investment company, which is regulated by the Reserve Bank of India, having got its approval for overseas direct investment, to be made abroad, we have remitted close to 100 million pounds, right, for making investments in financial assets, which has been duly disclosed at all points in time, including the balance sheet. And it is not even DHFL. Now, this was done at the WGC level, Vadhavan Global Capital level, which is the holding company of the company. So, to say that there are shell companies where more than 5,000 crores of money has been sent abroad, is itself, wrong. It's itself malicious and clearly has been done to malign the company's image in the public. This is not a whistleblower. This is a frivolous complaint which has been filed and which has been taken note of. And yes, the matter stands for this, for which the company is taking all remedial legal measures to address. There is no political contribution made by DHFL or any of its associates, subsidiaries, etc. Okay. So yes, I would like to vehemently deny that, because this is a direct allegation on the promoters of the company. This is a direct allegation on DHFL, right? Which obviously we will take it to its logical conclusion in the court of law.
P.C. Mohanan, the former acting chairman of the National Statistical Commission, has told CNBC TV18 that the NSE not being able to contribute to its objectives and the statistical body not being taken seriously were the key reasons behind his resignation. Now, he was speaking to my colleague Anshu Sharma a day after he and JV Meenakshi, the only two independent members on the NSE, headed for the exit. That's not all. Mohanan further highlighted that the new NSSO employment survey data was vetted by the statistical body but never released. The NSE, which reports to the Ministry of Statistics and Program Implementation, is a 7-member body, out of which 3 posts were already lying vacant. Now, with the resignation of Mohanan and Meenakshi, the only 2 members left on the commission are Amitabh Kant, who is the Niti Aayog CEO, and the chief statistician Praveen Srivastav.
The reason for our resignation is basically we thought the NSE is not able to contribute the objectives for which it was set up, like being the apex body for all official statistics, and we were not being taken very seriously.
Right. What are the key issues that you think were not being taken seriously by this commission, since it only comprised of 4 members? What could go wrong?
Some of the key decisions are on statistical matters, nothing else. This is a purely professional body. So some of the key decisions on statistical issues were not coming to the commission or coming after it is already taken up. So that is why we thought it's not being very seriously taken.
What about the employment survey data, which is approved by the commission but not released yet?
See, the normal practice for NSSO report is NSSO is under the oversight of the commission or all technical work. And all NSSO reports are approved by the commission for release. And before the commission, there used to be a governing council. And from 2006, the governing council's job has been given to the commission. So all NSSO reports are approved by the commission. And then it is released by the NSSO. So there is one report which we approved and that has not been released yet. So it's also one of the reasons. Okay.
There was controversy with regards to how Niti Aayog came out with a backdated GDP series. So you even raised it. So what was the whole idea of raising that as an issue? Did you reach out to the government and seek clarity as to how the commission will work and what are the issues that is prevailing and that commission is not able to work on?
See, commission is not part of the government. It is an independent setup. So it is not necessary for us that we have to apprise the government. And chief statistician is secretary of the commission, is part of the government. So there is no issue. And what we did not like is the involvement of Niti Aayog in the GDP release, and not as such the figures or methodology or anything like that. And this is, that is what we said.
Well, that's E.C. Mohan on why he resigned. Meanwhile, the Ministry of Statistics and Programme Implementation has clarified that the two members who have resigned from the NSC did not raise their concerns with regard to the functioning of the Commission in the last few months at least. The Ministry in a statement said, and I quote, the members had expressed certain concerns on the functioning of the Commission, including release of the Labour Force Survey results and the back series of GDP. These concerns were not expressed by the members in any of the meetings of the Commission in the last few months. End of quote. That's not all. The Ministry of Statistics and Programme Implementation also clarified on the unreleased job data. Their statement read, and I quote again, NSSO is processing the quarterly data for the period July 2017 to December 2018, and the report will be released thereafter, keeping in view India's strong demographic dividend and around 93% of the informal workforce. It is important to improve measures of employment through administrative statistics and complemented by periodic surveys. End of quote. On that note, we'll slip into a very short break on the show, but coming up next, sources tell Network 18 that the Comptroller and Auditor General could present a report on the controversial Rafale deal in the upcoming budget session. We'll get you more on this big story on the other side.
Chalet Hotels Limited, branded with globally recognized hospitality names in the luxury upper upscale and upscale hotel segments, according to the Horwath report. A part of K. Raheja Corp Group, a leading business group in India, having extensive experience in developing large-scale real estate, hospitality and commercial projects, now offers a public issue of equity shares of face value ₹10 each for cash at a premium. The Chalet Hotels 100% book issue being offered at a price band of ₹275 to ₹280 per equity share. Opens on January 29, 2019 and closes on January 31, 2019. For details and risk factors, refer to Red Herring Prospectus dated January 23, 2019.
कौन सा फ्लोर?
Italian marble.
Oh no, flat.
3 BHK है मैम.
घर बेचने का भूत सवार. लिस्ट कीजिए 99 एकर्स पर और पाइए जेन्युइन बायर्स.
जिनकी उंगली थाम कर चलना सीखा, हाथ थाम कर उन्हें दिखाऊं दुनिया.
बजाज अलियांज लाइफ गोल्ड प्लान्स के एक्सपीरियंस्ड इन्वेस्टमेंट मैनेजमेंट का साथ हो तो आप बस लाइफ गोल्ड प्लान करो. bajajalianzlife.com पर लॉग ऑन करो या हमारे इंश्योरेंस कंसल्टेंट से बात करो और बाकी
समझो हो गया.
ओ पापा जी हर 4 साल में गाड़ी बेच देते हैं और पैसे ले जाता है एजेंट. ओ मैं क्या कार्स 24 पे बेच दो तो कहने लगे
बस बातें करा लो, काम दाम कुछ करना नहीं.
ओ मैं क्या लाओ चाबी और सीधा गया कार्स 24. झट से गाड़ी बिकी और फट से पैसे ट्रांसफर.
कार बेचनी हो तो कार्स 24.
मेरे म्यूचुअल फंड्स सबको फॉरवर्ड करता हूँ.
कोई भी फेक न्यूज ढाई फॉरवर्ड ना करें. Let's all be responsible. Axis Mutual Fund, the responsible mutual fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. You're still with After the Bell, and here's the big development in the Rafale saga that we promised. We learned that the Comptroller and Auditor General report on the Rafale aircraft deal could be submitted in the Parliament in the upcoming budget session. Top officials have confirmed with Network 18 that the CAG is now in possession of the final draft of this report. Arunima, who broke that story, joins us with the latest. Arunima, what have you picked up in this case?
Well, three things. Number one, there will be two versions of that report. One which will be given to the Parliament, which will be the public version. This version may not have the price of those 36 jets mentioned. There will be a separate version, 3 copies of which will be given to the Ministry of Defence. This will perhaps have the price of those jets. The reason being given is that the MOD, in its response to the CAG, has said that in the interest of national security, the price of the jets should be kept away from the public, because if the price is made public, then enemy nations will get to know the kind of weaponry, etc., that the aircraft is coming loaded with. Number two, what we are told is that in this session itself, the CAG is aiming to submit to the report. It is saying if the Public Accounts Committee wants to know the exact price, it can get the original copy from the MOD. Even otherwise, as per CAG officials, the report that will be in the public domain will have the CAG's opinion vis-a-vis the deal's overall cost. What essentially the CAG officials are saying is that even without mentioning the exact price, the opinion will be given if the deal cracked by NDA was better or worse in terms of cost, and that should be sufficient for the PAC to make up its mind. So those are two important points coming out. Congress leaders we have been speaking to have made it clear that this kind of arrangement is not acceptable to them. If indeed the CAG puts an edited version out in the public domain, Congress will ensure that they raise the matter and target the government on this.
All right, Arunima, thank you very much for bringing us the very latest in that controversy. So 2 reports expected from the CAG. But time now for a special coverage of the upcoming union budget. Government officials have reiterated that the centre will stick to the convention and will present an interim budget when it presents the budget on the 1st of February. The clarification follows reports suggesting that the centre may go ahead with a full-fledged budget. Remember, speaking at the CNBC TV 18 India Business Leader Awards earlier this month, Union Minister Arun Jaitley had said that the government will follow the convention.
It entirely depends on what the existing situations are. And if we look at the big picture, there have been successes that we've seen in the last few years. There have also been challenges. And therefore, without getting into the specifics, because that would really be disclosing the mind into which we are working, some of those challenges really can't afford to wait. And therefore, obviously, there would be a necessity to address them. It's happened in the past. And therefore, we intend working within the parameters of the conventions as they exist.
Well, staying with our budget countdown coverage, in less than 2 days from now, Piyush Goyal will present Modi government's last budget before the Lok Sabha elections. And ahead of that, our team of reporters has been speaking to corporate India to get a sense of what each sector is expecting from the upcoming budget. Kevin joins us now. Kevin, you've been speaking to the metal sector experts and corporates to get a sense of their wish list. What have you picked up?
A two-pronged wish list from the steel and metal sector for the interim budget. Firstly, industry wants either a reduction or a removal of custom duties on key raw materials needed to produce steel and other metals like pet coke, anthracite coal, coking coal, graphite electrodes. Also, they want a safeguard import duty on steel products coming into India from other FTA countries, because they believe that there's a lot of dumping going on from other countries and this will help their domestic sales. They also would like an imposition of an export duty on key raw materials that are going outside India, like iron ore and graphite electrodes. So this is the wish list as far as the steel and metal sector is concerned.
All right, thank you for bringing us that report, Kevin. Meanwhile, even as the e-commerce sector prepares for new rules under the FDI policy, they have a few specific asks from this government on the budget. Mugdha Varyar is here with those expectations. Mugdha.
Even as the e-commerce sector is in a flux, given that the FDI policy kicks in from February 1st, and the sector is also anticipating an overarching e-commerce policy, the companies do have a few specific demands from the government on the upcoming budget. One of the main demands is that the 1% tax collection at source on e-commerce companies be done away with, especially because the e-commerce companies say they have faced technical glitches and that they have also not been able to register in some states. Secondly, these companies want that the government also push digital payments on these platforms, because remember, even today, 50% of all e-commerce orders are cash on delivery. And according to Redseer, cash on delivery orders usually see about 15 to 16% higher product returns and order cancellations. Lastly, these companies also want more clarity on the FDI policy as well as the e-commerce policy.
Very soon, if you launch the Uber app in Mumbai, you will get the option to choose a boat ride to get to your destination. That's right, the taxi aggregator has launched Uber Boat, a service that will offer a ferry ride on 2 preset routes for anywhere between 5,700 to 9,500 rupees per ride. CNBC TV 18's Priya Sheth caught up with Uber India's Prabjit Singh and began by asking him to explain the rationale behind this new foray.
You've launched Uber Boats in Mumbai, and this is the first city in India, and after Croatia, it's the second country to be launching Uber Boats. Run us through what's the thought process behind this initiative at Uber?
Look, at Uber, our goal is to move people more seamlessly and conveniently from point A to point B. What that means is we ideally want the Uber app to facilitate multiple modes, whether it be a 2-wheeler, 3-wheeler, 4-wheeler, which are the services we've already launched in multiple cities across the country. By launching the Uber Boat pilot today in Mumbai, we are going to also look at whether we can provide that same level of experience which our riders and consumers have come to expect from the Uber app. If we can extend it to also to the waterways. Waterways in India are a very fast-growing space. It also is already utilized by millions of riders.
You've been, 2 routes, are the 2 routes that you've selected at this point in time. Will there be more routes that you'll be adding to this, and which are the potential routes that you would consider?
I think it's too early to say what the other routes will be. For right now, we are very focusing on these 2 routes, which is from Gateway to Mandwa and back and Gateway to Elephanta and back. These itself are large routes. We want to make sure we make the experience on these routes better, both for consumers, which are the riders, and also the boat operators. And as we learn more, we will absolutely evaluate extension of the service.
I understand at this point you all will only be launching group boat services, but in terms of pricing, if you compare it with the kind of ferries that are available right now, how does pricing pitch as compared to them? And will you be looking at a surge pricing kind of model for these boats as well?
I think, as I mentioned, this is a pilot at this stage, which means a lot of the choices which we make on the business model, on how the platform runs, will evolve based on the feedback from consumers and the boat operators. And we'll continue to, for now, we will be starting with a fixed price for the specific route. And based on feedback we get from MMB, from the boat operators and consumers, we'll reevaluate that.
Well, I wonder if we'll get to see Uber helicopters also someday. But with that, it's a wrap on this edition of After the Bell. Do stay tuned to CNBC TV 18. Markets Today Talk Back will take all the action forward.